That's doing well in today's trading session. Quarter one numbers were good. Profit growth was strong. Loan book as well is healthy. But margins, well, they feel some pressure. Let's discuss it in further details. We have with us Mr. Raju, the Managing Director and CEO at Canara Bank, who joins us on the show. Hi, sir. Good morning. First of all, congratulations. Last quarter was actually a good set of numbers. Give us a few details, though. I'm looking at it. Your retail book has grown very, very well. And if I remember last, the gold portfolio was around 1.5 lakh crore. You could update us, how did the gold portfolio grow in the past quarter? And more interestingly, the retail part of the gold book, that has been growing a little bit better. I think last count was around 40,000 crores. So tell us about retail book, how is it growing? The gold book, and within that, the retail portion of it. Please go ahead, sir.
Actually, first let me say that we have given guidance for this financial year during the last quarter results announcement under 13 parameters. Out of that 11 parameters, the first quarter itself we have shown very good progress beyond that what we have given the guidance. So the only thing in NIM and the CASA, these two, of course, it is a concern area for us. Except those two things, remaining all key parameters, we are excelling in the first quarter. This is because of our operational efficiency. See, we know that the NIS will be under pressure for this whole year, but we are efficiently working for not immediately. That's the last 2 years, whatever we are working on the operational efficiency, that has started giving the results for this quarter's, last quarter also, we have got the benefit out of it. Now, let me say that regarding the credit, we have given a guidance of 10 to 11%, but we are sure that we will do more than 12% growth. Even we are little cautious. Last 2 years back, we have given a guidance of that our RAM should grow better than the corporate. That's what actually earlier we were at 54% RAM. We want to move towards the 60%. And I'm happy to share with you that by June 30th, our RAM has reached to the 58% of our total loan book. Our corporate, because we know that our NIA is under stress, we are selectively going on that without compromising the pricing. That is like a corporate is growing at 10%, but the RAM is growing almost at the 15%. And there our margins are being protected. Within the RAM, housing is growing at 14%, and the vehicle loan is growing at 22%. And the secured personal loan, you are talking about the gold loan. Gold loan now, as on date, we have crossed to 1,91,000 crores. That's the total loan book. Out of that, almost 56,000 crores is retail personal loan book. The March we were ended at 51,000. Now we are at 56,000 in the secured retail gold loan product. Of course, the secured retail gold loan product is contributing to us majority in that, but other parameters like a housing loan and vehicle loan are also beating the market. That's why our growth in the RAM credit is almost 32%, 33% in the year-on-year basis.
Right, so I wanted to get that point out of the way because, you know, the retail gold portion was missing. So we've got that number 1.9 lakh is the total gold portfolio, and retail's around 56,000, which has been growing very well. Got that, sir. NIMs in the near term, they'll be under pressure. So for quarter two, do we see it go a little bit lower, say a sub 2.5%? But what kind of a recovery are you factoring in quarter three and quarter four? Can it end the year closer to around 2.7%? That's on NIMs. And on the ROA, that's done quite well, 1.1%. But a couple of brokerage notes are saying that it's run its course now. It will not expand from here. Where is it headed?
No, first, let me speak on NIMs, sir. The NIMs, whatever it is, the current, this 1st February, there is a rate cut, April, there is a rate cut, and June, there is a rate cut. These three rate cuts, we have a 45% of portfolio is linked to the RLLR. Because of that, we have to pass it on to that 100 basis points. We have passed it on to the customers immediately within 1 week of announcement of the RBI. Due to that, our yield on advances has come down 36 basis points from 8.83 to 8.47. But whereas we cannot pass it on this burden on the depositors, on existing depositors, because you are supposed to pay whatever you have agreed the deposit rate till the contract is expires. Our cost of deposit is still maintaining at 5.74. We reduced our deposit rates only on the 9th of the June after latest MPC announcement. 50 to 60 basis points. That benefit we will start yielding that in this quarter onwards. Of course, with this present scenario, the stress will continue in the second quarter also, but I see that will be a little uptake will be there in the third and fourth quarter, subject to if there are no more rate cuts are there. But if there are, again, we are hearing from various corners that again the rate cuts may be there, but every rate cut, bank has to absorb that burden at least minimum 6 months. So that will have its own impact. But if there are no further rate cuts, definitely we anticipate that it will be around 2.65 to 2.7.
And ROA, sir?
ROA, we are telling that there is no problem on the net profits. Since our net profits are comfortable, though we have given at 1.05 the guidance, we have first quarter itself 114, we have shown that. Here, let me say that everybody was worried about our PSLC income, but our PSLC income is stable, and we have earned almost in the first quarter itself 1,200 crores. And even now, our priority sector and agriculture and small and marginal farmers, we have enough cushion, more than 5% beyond the regulated requirements. That portfolio also we are going to encash it in the second quarter and the third quarter whenever we get a good pricing, because there is a huge demand in the market. Last year we were sold at only 1.7%, but this time we sold it almost in the first quarter 2.75 to 2.90. That's the demand is there. That is another avenue for us. And we have already approved some 1,200 crores worth of big accounts, 4-5 accounts in the OTS, which are scheduled for that time limits. We have given it for 90 days. So we are expecting that much recovery from there also. So second quarter and third quarter, we don't have any issue at this moment. But simultaneously, let me say that if you see the interest income, we could manage the absolute numbers without any fall because of our average advances have increased. So only the yield has come down, but absolute interest income we are able to maintain. Since our credit growth we are expecting beyond 12%, this interest income absolute numbers we will have benefit on that. So that's there won't be any effect on the net profit. So simultaneously we expect that our definitely NII, the return on average assets, ROA will be beyond our whatever the guidance we have given 105, but definitely we will be above 1.10.
Okay. All right, Mr. Raju, thanks a lot for joining in, giving us that quick outlook in terms of growth. You're quite satisfied that you have given some parameters and you have outbeaten most of them in the first quarter. We'll track you to the remaining numbers for the remainder of this year. Time to slip into a short break, but you have the management of Emphasis that's waiting to discuss their numbers. The stock, by the way, is doing quite well.